Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Thanks for tuning in, and always we have a warm welcome for you. Appreciate you following our podcast and radio show. This is the Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the #1 business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch our podcast on TomWilsonProperties.com or on iTunes or on YouTube. You can go to our website, TomWilsonProperties.com, find a lot of investor information on there, what it's about, how to do it, frequently asked questions. You also can see products that we've had in the past and products that we have currently available. And if you sign up for our newsletter, weekly newsletter on what's going on in the world of economics, kinds of information that you'll be hearing from Robert Campbell today, you can also get access to products that we can only make available to our client base. So we have commercial syndications for office, multifam, retail, industrial that are for $50,000 a share. You can participate in products that normally are only available to the wealthy or to the institutional investors. So it's very popular now, and we are very excited about presenting these kinds of products to our client base. And we also have the traditional turnkey rental properties available. So that's all on TomWilsonProperties.com. And today we welcome back our good friend and real estate timing expert, Robert Campbell, and he's on with us today again. It's been a few months. Robert Campbell earned a BA in economics from UCLA. He also has an MBA in real estate finance from San Diego State University. And Robert has been an investor over multi-decades. He's been a developer, has built over 50 homes and apartment units. He's been a real estate licensed broker and handled hundreds of sales and mortgage financing for many, many clients. And as a real estate advisor, he's been publishing the Campbell Real Estate Timing Letter since 2002, which I subscribed to for almost that whole time. And it's one of the very few regularly published letters in this business that I read on a regular basis and trust. And Robert's one of those few that predicted the crash accurately. And so, Robert, welcome back to the program.
Thank you very much.
So, Robert, for maybe some of our listeners who haven't been introduced to you before, just briefly tell us your story of how you got in real estate with helping out your dad with flips and so forth. Sure.
For those of you that don't know me, I jokingly like people that I was born on a building site because I'm the son of a home builder. My father was building homes when I was born. So literally, I have physically and financially been around the real estate business my entire life. When I say my entire life, that's almost 70 years, because in 3 months I'm going to be 70 years old. So I've seen the cycles not only from a first-hand basis. You know, at our dinner table, my dad was a general contractor and a developer, spec builder. And so during the good years, you knew they were good years. You know, we went on vacations and bought new cars, and during the bad years, we didn't. And, you know, there was times when a couple times I remember we moved into an expensive spec home that wouldn't sell. So we did what you have to do in order to survive in this business. And my dad was one of the what I consider the rare people in this world that acted as a real estate developer and never went broke. And that's quite an accomplishment in this business, because anybody that's been around real estate any length of time and has been through the cycles know that it's a rough and tough business.
What got you
And that was my background. And I built for 10 years on my own. My education was at UCLA. Degree in economics, and I have to confess to everybody that I spent a lot more time on the volleyball court than I did in the lecture hall. However, it was always an engaging topic to me, and after studying it, and researching it for 20 or 30 years, I finally figured out how it works, and now it's a full-time business for me. I don't develop anymore because it doesn't meet with my lifestyle. I get up at 5 in the morning and work until about 9:30. Go to the gym and lift weights for an hour and a half. Come home, work 2 or 3 hours. Go to the beach in Del Mar, run in the sand. Then come home and work for the rest of the day. And I do that 365 days out of the year. And it's a real grind for me. It's a real rough life, as you can imagine, Tom. I've been publishing my timing letter since 2002. And I have subscribers all over the world, and it's unbelievably interesting that once you study a subject for as long as I've studied it, that how you just get smarter and smarter and smarter, and that's why I have such great subscribers like Tom Wilson, because it's the real estate timing model I've created is never very far off the mark. Never very far. It has a success rate going back, almost 35 years of between 85 and 90%. And it's all driven by 100% by data. No opinion required. So I'm real pleased with and satisfied that I was able to create that, and that's why I'm looking to have good guys like Tom invite me on their show to talk about the market.
Always a pleasure. What's the tell the listeners what are some of the variables that tell you about market timing?
That's a great question. There's 5. I wrote the book Timing the Real Estate Market, and I presented 5 key indicators that I researched and followed that are highly correlated with price movement in whatever major real estate market you want to follow. And those 5 indicators, everybody, are existing home sales, new home building permits, notice of defaults, foreclosure sales, and interest rates. And if you simply follow those 5 key indicators, you will have, and know what the trends are, because everything's about trends. I'm a trend follower. I'm not a fortune teller. You will have a very, very good read on not only what direction prices are going, but you will be able to predict trend reversals 3 to 6 months in advance of their occurrence. So that gives you time to get in before prices start going down, and to get out before they start going down, and to get in before they start going up.
Do you think market timing is even more important to understand today than historically?
Absolutely. Oh, absolutely. That's because the Fed has. If you look at the cycles going back in time. Let's say you go back 50 years and look at the cycles. Sure, there were cycles, small cycles, but because the economic climate in the United States has become so dominated by the actions of the Federal Reserve, they have created greater booms and greater busts than ever before, and it's all to keep the wheels on the car. So absolutely, and especially if you live in California. California is the boom bust state of the country. Go back and if you look at the cycles over the compared California cycles compared with the United States as a whole, you'll see they are much more dramatic to the upside and much more dramatic to the downside. So California, for those that like to time markets, it's the ideal place to do your market timing.
Now, I just was down last weekend at Bruce Norris's new timing presentation and report. That you two are pretty similar in many of your views over the years, as I've followed both of you.
Right.
Bruce is of the feeling that because our population growth looks like it's slowing, that our up and down cycles may not be quite as volatile moving forward in California as they were in the past. Do you feel the same way?
I have no opinion on that, Tom.
Okay.
No opinion on it, because as a trend follower, I base everything on data. And if that's the case, if what Bruce says is true, if his prediction turns out to be true, you're going to be able to, that the indicators that I follow are going to start reflecting that. I am for a long time, and I know a lot of really, really smart guys that in the business, most of which are in their 70s, 80s, and some of them 90s. That predicting the future about what's going to happen, you don't know. You don't know what's going to happen to population. You don't know what's going to happen to the economy. You don't know what the Federal Reserve is going to do. You don't know any of those things. But what you can do is if you follow existing home sales, new home building permits, notice of defaults, those key indicators will reflect perfectly what's going on in the real estate market, so you don't have to predict what's going to happen. And that's the difference between Bruce and I. I love Bruce Norris. He and I have been good friends for 15 years. And I know the kind of work he does. My work differs from him because I am entirely data-driven.
Well, he is too. He is too, Robert. He's entirely data-driven also. I mean, he had 237 charts in his presentation, so he's data-driven too. He just, I think it sounds like he tends to extrapolate from that and project what he, where he thinks things are going. And you do too. You just maybe a shorter time. I mean, you accurately predicted the crash that was happened in 07, 08, just like Bruce did.
Because that was a 3.9 standard deviation event. That was pure mathematics, Tom. That was the easiest call I ever made in my life.
It's amazing how what percent of economists did not project that correctly.
Don't get me started on that.
It's too late.
Most of the economists, who do they work for? They work for real estate companies, or they work in the real estate industry. Have you ever heard a real estate economist that works for NAR, CAR, or a major REIT come out and say, this thing's going to crash, get out now? You'll never hear that ever in a million years, even though that's reality.
Right. The first thing I ask is who's paying their check, right? Where their payroll come from?
Exactly. It's who butters their bread. Who butters their bread. It's like the economists in the Federal Reserve. There's about 10,000 or 1,000 of them. They all have PhDs in economics, and not one of them ever disagrees with the other one. It's like an echo chamber.
Well, it's
friggin' amazing.
Well, they also.
So that's why in this world today.
They also have never been out in the field and bought or sold any real estate, right? We have with us today, Rob.
That for one thing, but plus, there's a storyline. All these guys better toe the storyline, or they're not going to be working for the Federal Reserve anymore.
Indeed, we got Robert Campbell with us today, talking about the economy and real estate cycles. Stay with us, and we'll be right back on Real Estate Power Investing.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
With us today is Robert Campbell, real estate timing expert, and unlike some economists, one who's grown up in the world of real estate and has got practical, hands-on experience to help him understand and monitor all the data that he follows. We're talking about the economy and where it's headed and its impact on real estate. Robert, you think we are approaching another bubble here in real estate or stock market? Or do you think we got good ways to go?
Well, we are definitely the real estate is fully valued. It's highly valued, I should probably say. And if you look at the cycles of the past and compare them, and to use a baseball analogy, I would probably say that we are in the 6th, 7th, or 8th inning. Mm-hmm. We're not in the first inning anymore. That train left the station a long time ago.
Yep, in every location. Yep.
Yeah, in every location. The ideal time to buy, was 4 or 5 years ago. Like, for example, my my timing model, for Southern California gave a buy signal in, I think it was April 2010.
Mm-hmm.
So that was, that's almost 7 years ago.
Yep.
And even though I don't believe that there's any fixed number of years for cycles, like up 7 years, down 7 years, or anything like that, I think that's kind of silly. That we've been in an up cycle for 6 or 7 years, and if you know real estate the way I know real estate, that all good things come to an end, along with all bad things come to an end, Tom.
Yep. What do you think is a common misperception about the lay public, or let's say the average investor? What do you think is one of the common misperceptions about the real estate market and timing?
Oh, well, as far as timing, I think most people don't have the skills. Most people don't have the skills to employ real estate timing, so they default to the real estate is always a good investment, and nothing could be further from the truth. There's optimal times to buy and there's optimal times to sell. And those are the kind of the way that's the way I've always operated, and that's with my own personal investments. And you have to be really, really patient in order to wait for the good times, wait for the bloods in the street. And most people don't have that kind of patience, Tom. And I'm not talking about the home you live in. Home you live in my view, is not an investment. We all have to live somewhere. And if you have a good enough job and you can afford the payments, just buy the home. Just buy the home, and live with it. And if it goes down 20, 30, 40, 50% or whatever, at least it's a home, it's providing a home for you and your family. But when it comes to investment properties, rentals and things like that, most people don't have the patience to wait for the optimal times to buy and then sell those properties at the optimal time, because the cycles are so long. And people get impatient.
Let's move back to the
against them.
Let's move back.
Long run.
Robert, let's move back to the general economy for a moment. How much longer do you think U.S. Can kick the can down the road? Do you think as long as we're the best-looking horse outside the glue factory, it's all a relative matter of to other world economies?
Yeah, I think, to a large degree, I think that, capital flight is still coming into the United States, which certainly boosts our money. Boosts our markets, both real estate, and the stock market. That's what you're seeing right now. And in my view, that the U.S. is going to be the last Ponzi scheme to fail. So, we look good right now. Everything still looks good. I'm long stocks, I'm long real estate.
Okay. You think, what about our stock market? You think it's got a little room to go, or would you, if you were in it, would you get out?
When anybody asks me, like, okay, how's real estate or how's the stock market? My response is always 4 words. The trend is up or the trend is down. And in both of those indicators right now, Tom, the trend is up. So you got to be long. Okay.
All right. We got Robert Campbell with us today and talking about real estate timing, and for which he's an expert. We're talking about the U.S. economy, and when we come back, we're going to talk about how Trump administration might affect real estate investors. We're going to ask Robert if he thinks the recession is coming up in the next couple of years or so, where interest rates are headed, and things like that. So if you aren't subscribed to Robert Campbell's newsletter, you really should do that. It's one of the wonderful things that I get on a regular basis I read that helps me make my decisions in real estate. So we'll tell you a little bit later how to subscribe to that. So stay with us here on Real Estate Radio Power Investing on KDOW 1220 AM, the Wall Street Business Network. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Robert Campbell, real estate timing expert, with us today. Robert, do you think we got a recession brewing, even though the trends right now are up? And if so, do you think it'll be a softer landing?
Yes, I think we're going to have a recession the next 2 years. That typically happens with all Republican presidencies. If you go back in time and look at the occurrence of recessions, and then when Republican presidents get elected, that's highly correlated with recessions. And the degree of the recession that we're going to have, I expect it to be another nasty one, Tom.
Do you? So you don't see us off landing?
No, I don't see us off landing. We've become a very, very, our economy in general, because we've been driven so much by Fed actions, manipulating markets and Fed policy. You can push them in one direction to keep the wheels on the car, but when things start getting bad, when you have that correction, it's going to be an equally bad correction. And what we're seeing right now, to a large degree, what's going to drive the recession is the pension crisis. We're in a real bad pension crisis. All these pensions, California, all over the United States, they're woefully underfunded, and the money's not there. And so you're going to have to figure out, okay, who's going to pay these pensions? Are you going to cut the pensions, or are you going to start taxing people?
Which certainly
pensions, which they're doing in Chicago and in Texas right now. So I think that people should watch the pension crisis very closely. That's an $18 trillion industry, and how that rolls out one way or another, to a large degree, is going to determine how bad the recession is.
Well, clearly it's a major problem, but has been for a long time. So is there some trigger event you see, or is it just going to reach a critical mass where it's all of a sudden?
What the trigger mechanism is, Tom, is the baby boomers, the number of people that are retiring right now is accelerating. Us boomers are accelerating.
Yep.
And the entitlement program, and everybody's run out of money. They're running out of money, and they can't make the pensions. Here in California, for example, I think the CalPERS, I think that their portfolio, that they invest money in order to make the future payouts, I think they made something like 1% on their 1% on their portfolio last year.
To what degree?
That's not going to cut it.
To what degree do you think Black Swan event might be a factor? Do you think we've grown insensitive to Black Swan events in the sense they happen so often now, or do you think that's still a trigger potential?
No, I don't think it's going to be a Black Swan event. And even if it was, we have no protection for it. You better have your preparations in ahead of time before a Black Swan event, about what could happen. But I just think it's going to happen rather slowly but surely, that all these pensions, one by one, are going to come crying to the federal government and say, or the local taxpayers, and say, look, we can't make our payouts anymore, so we think that you should start taxing the people, because technically they're guaranteed and can't be defaulted on, and find some way of taxing the people, the non-pension holders, the public at large, to make these payments. Which, of course, is going to be devastating to those people, because the average guy on the street, isn't doing really well financially now, or Donald Trump wouldn't have been elected president.
Right. Very, very good point. Yeah. When we come back, we're going to ask Robert what he thinks are some good things to do for real estate investors coming up. What kind of actions would he recommend that we do to protect against what upcoming recessions we might have? So stay with us on Real Estate Radio Power Investing on KDOW 1220 AM. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Real estate timing expert Robert Campbell with us today. So, Robert, very pretty interesting times we're in for someone interested in economics and finance and so forth, isn't it? It's pretty fascinating. So have to watch things very carefully because they can have bigger swings and everything's more sensitive. What do you think is going to be happening to inflation, our GDP, our interest rates? Let's talk about that a little bit.
Okay. As a subscriber to my timing letter, you may remember about the middle of 2016, I made the call that it appeared to me that the trend, that we've seen the lows in interest rates. Because the Dow Jones Utility Index hit became a 3 standard deviation event. I mean, rates drop lower, and 3 standard deviation events only occur about every 1,100 years, and that's one of the things I watch. And I said, we've seen the bottom. Interest rates have been going down since 1981, and all the evidence right now shows that the trend has changed, and interest rates are going to start moving up. And, that has certainly been the case. They bottomed out. Interest rates, bottomed out last year at about, mortgage rates, 3.43%. And today they're at 4.2%.
So do you not see negative interest rates in our future?
No, we won't see that.
Okay.
Donald Trump's not going to allow that to happen. I know Donald Trump. Donald Trump and I are exactly the same age. And I've been following Donald Trump for 50 years because he's been in the real estate business, and so have I. And he's not going to allow that to happen. That's one of those things he just will not. He won't let the Federal Reserve get crazy on us. He just won't let that happen. So it's not going to be negative interest rates, God forbid.
Do you think his administration is going to be favorable for real estate investors, for policy-wise?
Interestingly, I'm not so sure. I'm not so sure because he's afraid, that he was only in office one day, Tom. And remember when the FHA policy was to reduce the premium FHA borrowers have to buy so that more people qualified for the loan? Mm-hmm. He canceled that. And he canceled that because his good friend, who's an advisor, he's a big hedge fund guy. Big hedge fund guy said, the stock market is overvalued, and so is real estate, and you have to be really, really careful. And so what I think the reason he canceled that decrease in the FHA premium was so things wouldn't get too more exuberant. So I think Trump's kind of leaning into the wind right now, Tom. Mm-hmm. Okay. Because he said if this thing's going to take a downturn, and his advisors are telling him that we're ripe for a downturn. I mean, what we certainly don't need is more FHA buyers, rushing into the market with 3.5% down payments that the government is essentially on the hook for if those guys end up defaulting, when the market turns down. So that's interesting, and that from Donald Trump, that didn't surprise me one bit. I think that fits his business philosophy very carefully, in as much as I believe he's truly looking out for the best interest of our country.
Think our debt to GDP is going to keep climbing?
Yes, no question about it.
Yep.
It's going to keep climbing, and where that eventually ends is anybody's guess, but all this $1 trillion of infrastructure spending that he's planning, that's all going to be on borrowed money, Tom.
How do you think China's
also where the debt keeps coming in is Social Security, Medicare, and the federal pensions. They are all woefully underfunded right now, and the deficit will grow every single year for the next 10 years. And what I believe the government's going to do, they're going to print money. They're either going to borrow money or print money to cover those deficits.
Just like we've been.
Because he's lowering taxes.
Yep.
Where's the money going to come from?
Well, the theory is that you stimulate the economy and you have more production, and therefore you get more total absolute tax dollars, even though the rate's lower, right? Isn't that the theory?
Yes, right. Cutting the tax rate is certainly a net positive. A net negative, however, is the deep hole we've already dug ourselves into, Tom.
Yep.
He's making all the right moves. Unfortunately, that Mr. Trump took over at a time when that we've lived above our means in a big way for quite a while now, and especially starting with the pensions, it looks like it might be time, that we start having to back up to, so the matter doesn't get worse.
What do you think the impact's going to be on China? Of course, is the word's out that they are restricting the amount of dollars they're going to let their folks send out of the country. How do you think that's going to affect their real estate?
It's certainly not going to help it. That's for sure. But I think those people will find a way to get the money out of the country. It's amazing. If you want, the rich people, and we're talking about big money, rich people, they'll find a way to get it out. Just like the money's coming out of Europe, Tom. It's coming out of Europe into the United States. Those are big pluses, for our asset markets, real estate and stocks.
What do you think are some good places for real estate investors to put their money right now?
I would put my money right now in, unless you're real nimble, which most real estate investors are not, I would go to cash flow areas like in the Sun Belt states. I like Oklahoma. I like Texas. I like Memphis. I'd be looking for high tax flow, for high cash flows in areas that have been, that historically aren't very volatile. That's where I'd put my money.
Mm-hmm. Yep. That's what my conclusion has been too. And we're looking very hard for places where the cash flow is higher than the coastal high-end states, more predictable, and where the historically they've been have dropped less. So, my attorney, two of my attorneys in this business that do our private placement memorandums say that their most successful clients have over the long term have been ones that have been prepared to weather a storm, and that they're investing in kinds of products that cash flow now and that have very low risk of going down. But you can always have to assume that there'll be a recession. You got to have enough reserves and enough. It's got to be good enough product that's going to ride out a storm. We got Robert Campbell with us today, real estate timing expert, and we'll be back in just a moment for some wrap-up thoughts and also tell you where he's going to be speaking next.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Always a pleasure to have Robert Campbell with us. Always learn a lot. He's data-driven, and you should sign up for his newsletter. Robert, how do they do that?
They can do that by going to realestatetiming.com. No hyphens, no dots, realestatetiming.com, and they can subscribe to my newsletter. And if you're a first-time subscriber, you'll subscribe for 1 year, and I'll give you a free copy of my book, Timing the Real Estate Market, which tells you exactly how my timing indicators work and how my model works. And I've been using that same model for 15 straight years to make accurate calls for the peaks and valleys of real estate cycles.
I highly recommend it, endorse it. I don't get any kickback from Robert on it. I just think it's one of the best and most accurate sources that I've found. So I recommend that you do that. And Robert has spoken at San Jose Real Estate Investment Club in the past, and he speaks annually at the Bay Area Wealth Builders up in Marin. And he'll be there. We're broadcasting this on the day before his next speaking event. So if you're listening to this on the 15th, Wednesday, then I recommend that you get up to the Best Western Corte Madera Inn at 6:30 on Thursday the 16th for the regular meeting. What you should do is go to bawb.info, Bay Area Wealth Builders, bawb.info, and go register, sign up. It's always a sellout. Go sign up for that and go listen to Robert, and he'll have a lot more information, and you can see the charts that he bases his analysis on. And remember to go to TomWilsonProperties.com, and we post a lot of this information on there. You can also get this podcast and all of the other podcasts that we do, and a lot of real estate information, and also a lot of you can also sign up for our newsletter, which gets you access to a lot of the products that are only available if you're signed up. Just 30 seconds closing thoughts there, Robert?
Yes, anybody that is interested in hearing me speak at the Bay Area Wealth Builders on Thursday, the 16th of February, I promise you, you will not be disappointed.
You won't fall asleep either.
You won't fall asleep. I had an old college friend of mine that, in fact, last night I spoke up in Los Angeles at Bill Tan's club.
Yes.
And Bill Tan, I don't know if you know Bill Tan.
Yes, I do.
He and I have known each other for 10 years. He's a real estate man. And he had me come and speak at his club in San Diego for the last 15 years. He said, I can't believe how Bob's presentations have changed in 15 years. And he said he's become, they have improved by 1,000%. Not that they weren't good before.
I was going to say, I don't know if I'd take that as a compliment, but coming from him, I know it was.
I know. Anybody here that you know, you want a wake-up call and you want somebody to rattle your cage and make you think outside the box, that's what I pride myself in doing.
Yep, you do a great job.
And look at other opinions.
Yep,
because they come from good sources, and I'd love to see you there.
Great. Robert, thanks so much for being with us again. We love you. You keep giving us the great data. Sign up for his newsletter. Go to BAWB every month, and SJREI clubs. These and the NorCal RIA and the Sacramento. They're some of my favorite places for information. This is Tom Wilson at the Real Estate Radio Power Investing Program on KDAW 1220 AM. Remember, the only thing that matters is what you do next. Thanks for being with us.